Ladies and gentlemen, welcome to Metropolis Radio. Today we are taking a look at this article from the Hollywood Reporter that reads, Will Netflix's stock become less driven by subscriber growth? Yes, I stole the title of this video from this headline, but bite me, I don't care. While net additions have been a huge focus, a Wells Fargo analyst makes the case that pricing and average revenue per user may be a better indicator going forward. And I think that this highlights the biggest problem with the streaming services business model. We'll get to that in just a couple of minutes. So starting here, although Netflix boasts 207 million global subscribers, the company is still viewed by Wall Street as a disruptor. Really? After this many years? You know, I remember a time when to access the streaming on Netflix's streaming, you had to be a DVD subscriber. And then when did they really, I don't think it was until like 2012, 2013 when they made streaming the, a separate package, and streaming back then was only like $8 a month. You want to guess what it is at now? Well, let's pull it up on Netflix's official website. For the standard, which most people have, it's $14 a month. Almost as much as HBO is. Not HBO Max, but HBO, the cable channel. Now, if you want 4K, you're paying $18, which is more than HBO Max, sadly. But let's get back to the Hollywood Reporter article. Better than expected sub growth has made investors swoon for the stock. Well, I think 2020 also helped. Shortfalls have chilled it. Yet, as analysts expect Netflix to miss sub expectations again when it reports its latest results July 20. That's July 20th. Another indicator for the streaming giant is emerging. Earnings and average revenue per user, helped by price increases, are becoming more important to Netflix's performance, argues Wells Fargo analyst Stephen Cahall. I think it's pronounced Cahall or Cahall. In the U.S., Netflix plans range from $9 to $18 a month, even if sub gains hold steady in the 20 million to 25 million per year range. The math makes annual net adds a decelerating percentage on the growth base, end quote, of its revenue, Cahall explains in a June 23rd report. Basically, Netflix, to keep pace in the stock market, has to keep growing and growing and growing and growing and growing and growing and never ever stopping. No downsides. It has to keep going up and up and up and up and up and up. Even if there's a finite number of people in the world who can have Netflix, doesn't matter. You got to keep going up and up and up and up and up and up. And how do you accomplish that? Well, when you run out of people to sell to, you just jack up the fucking price. Simple as that. Cahill's forecast title, "The World According to Garp." That's actually pretty funny. That's a Robin Williams movie, I think. "The World According to Garp," which stands for growth at a reasonable price. Argues that the streamer is going through a similar change as Google parent company Alphabet and Facebook before it, quote, "The past year has turned Netflix from more of a subscriber net ad story to something more predictable and suitable for GARP investors." I think this is just them trying to hide the fact that they can't rely on the number of people signing up anymore, because at some point you're gonna tap out. There's only so much blood you can draw from a turnip. What's another one? There's only so much blood you can drain from a stone, is another one I've heard. Before you're just not going to be able to draw anymore, you're just not going to be able to make any more money than you already are. You can't keep going up and up and up and up and up and up with no end in sight. I hate to break it to you, I know that that's what Wall Street wants, but that's not how the real world works. KeyBank analyst Justin Patterson echoed Cahill's point in a report saying that Netflix's subgrowth, quote, "softens does not materially weigh on financials," and noting that each 1 million variance in net adds only amounts to a less than 1% change of the revenue base, limiting financial downside risk. Yeah, but here's another problem with Netflix, though, is Netflix got into this really, really bad period where they just kept spending and spending and spending and spending like they were the king of the fucking mountain. And they're pretty soon no longer going to be king of the mountain. I think what was it, 2018 or 2019, they spent something like $15 billion just for original content just that year alone. And they were saying it was only going to go up from there. Patterson, in a June 16th report, argues the data suggests, quote, Netflix is tracking below our street estimates of 800,000 per 1 million due to a lighter content slate and more time spent outdoors, or people are getting sick and fucking tired of fucking streaming content. I'm gonna be perfectly honest with you guys right now. I just recently canceled my Netflix subscription. And why did I do that? Because I wasn't watching jack fucking shit on it. You know what streaming services I watch more? I watch a shit ton of Hulu. I'm watching a shit ton of Peacock right now. Discovery Plus, believe it or not, I'm watching a shit ton of. Netflix, I was watching less and less. There was a time I went like 4 or 5 months without ever opening up the app, and I just finally said, why the hell am I continuing to pay for this service that I'm clearly not fucking using? But the article goes on, he warned that, quote, this dynamic could lead to SoftNet ad guidance for the third quarter. That's just a bunch of financial jargon mumbo-jumbo bullshit. But suggested that thanks to new episodes of original series, there was, quote, light at the end of the tunnel with the return of Money Heist third and fourth quarters and The Witcher. I'll give you The Witcher, but people are gonna tune in, watch it for a month, and then leave after that. That's typically how it works. However, some on the street are bearish on the Reed Hastings-led Netflix before its mid-year update. In the June 22nd report, benchmark analyst Matthew Harrigan, who has a sell rating on the stock, noted its sell-off this year. Harrigan warned the streamer might be losing its status as a disruptive growth firm. Nah. You mean after 10 fucking years, at some point, you're no longer going to be a disruptor? Imagine my fucking shock. Quote, the market may be starting to reprice Netflix as largely a media name than a category killer tech company. Yeah, they haven't really invested that much in tech, you know. Oh my god, they started the whole streaming war. Yeah, technically Comcast started that, but that's neither here nor there. With Netflix off 7.4% year-to-date versus a 9.0% NASDAQ 100 return, and they break down the Netflix revenue gains, price increases, trying to account for my black bars here. So you see 2019, you had, 81.9% subscriber additions, and then price increases was an 18.1%. Their estimate over the next few years, Wells Fargo expects price increases to make up a large share of Netflix revenue. Well, no shit. Like I said, there's only so much blood you can draw from the turnip. At some point you're going to cap out. At some point you're gonna hit your cap. You can't grow any further. And you know what I think is going to happen within the streaming market? And I'm going to say this right here, right now. I think you're going to see a free version of Netflix hit the market within a few years. It's going to be a free ad-supported version. And if you don't believe me, look at the success of Tubi TV and Pluto TV right now. Completely free streaming services. One is more a live TV model. I think that's Pluto TV. And Tubi TV is more of the on-demand. All 100% ad-supported. So, are people going to continue paying, $14 a month right now? And keep in mind, this is set to go up year over year. Or are people going to settle for the freemium free version supported with ads? I think more people would take the freemium version than continue to pay $20 a month per streaming service, because simply there's just too many in the market. And honestly, Netflix is not the same service it was 5 years ago in its heyday. And guys, I'm going to go ahead and end it right here because I've basically gone on long enough about this, but I actually want to know what you guys think. Are you guys going to stick with Netflix? I know they have the whole, cuties drama, and I know a lot of people that canceled Netflix after that. I personally didn't because I was still watching stuff on there, but like I said, I just recently canceled it, and I don't know if I'm going to go back and resubscribe to it because, like I said, there's just nothing on there for me. So that's going to do it for today, guys. If you guys have been following me for a while, I am terrible at ending things, so I will just see you guys next time.